In 2025, the Federal Reserve cut interest rates for the first time since December, lowering them by 25 basis points. The decision came after weak labor market data outweighed persistent inflation, which is still above the Fed's 2% target at 2.9. Markets reacted positively to the move, with the S&P 500, Nasdaq, and Dow all hitting record highs, fueled by strong corporate earnings as more than 80% of S&P 500 companies beat expectations. History shows that rate cuts near all-time highs often push stocks even higher, which has given investors more confidence. The sectors most likely to benefit from this new rate-cutting cycle are housing and real estate, where cheaper mortgages drive home buying and construction; consumer discretionary, as lower borrowing costs encourage people to spend more on travel, retail, and entertainment; technology and small-cap companies, which thrive on easier access to capital; and financials, where reduced loan defaults and cheaper financing improve bank performance. Analysts expect this to be just the first of several cuts over the next year, as the Fed tries to balance inflation control with supporting the labor market. For investors, the message is clear. Sectors tied to growth, housing, and consumer spending could see the strongest opportunities in the months ahead. Following the Fed's latest rate cut, several industries sensitive to interest rates, like real estate, consumer discretionary, and financial services, are expected to benefit the most. Among the top stocks to watch, Host Hotels and Resorts, ticker symbol 8HST, stands out as the world's largest lodging REIT. The company combines exposure to real estate and discretionary spending, and despite ongoing pressure in the real estate market, it continues to deliver strong results. In the second quarter of 2025, Host reported higher EBITDA, stronger demand, and increased ancillary spending. Management has been strategic with acquisitions and disposals, maintaining a healthy balance sheet and a strong cash position that puts it in a great spot to capitalize on growth opportunities in a lower rate environment. Another REIT to keep on the radar is Postal Realty Trust, ticker symbol PSLT, a small cap stock primarily leasing properties to the United States Postal Service. This business model offers stability, long-term contracts, and resilience even in downturns. The company recently raised its guidance for the year, supported by near-perfect occupancy and consistent dividend growth. With America's logistical infrastructure becoming increasingly important, especially with new technology and AI-driven investments, Postal Realty Trust could be an early opportunity, especially given its discounted valuation compared to peers. The third pick is Fintech Holding, also known as TIGR Brokers, ticker symbol TIGR, a global fintech headquartered in Singapore that provides low-cost trading solutions for Chinese investors. While not a U.S. company, its inclusion makes sense because U.S. rate cuts ripple through global markets, sparking more trading activity and risk-on sentiment. TIGR Brokers has shown massive growth, with revenue and earnings rising far above sector averages. It has also leaned into innovation with AI tools like TIGR GPT and expansion into crypto. Despite rallying over 200% in the last year, its valuation remains attractive, backed by high profitability and strong momentum. Together, these companies, Host Hotels and Resorts, Postal Realty Trust, and Fintech, represent strong opportunities in sectors poised to benefit from the Fed's shift in policy. While rate cuts may bring volatility, they also open the door for significant upside in stocks well-positioned to ride the wave of cheaper capital and renewed investor confidence. As the Federal Reserve resumes rate cuts, investors have plenty of sectors to watch closely. Upcoming employment data and corporate earnings will play a key role in showing whether this policy shift can ease concerns without fueling inflation again. Some analysts even expect additional cuts before the year is over. In this changing environment, strong opportunities are emerging. Host Hotels and Resorts, Postal Realty Trust, and Fintech have all delivered impressive results this year, combining solid growth with strong profitability. Even though elevated prices are likely to remain a challenge, these stocks are well positioned to benefit from the Fed's moves and could strengthen any portfolio. Thanks for watching, and I'll see you next time.